Here are the 5 types of stocks that can lose your money. Number 1, pharma stocks. One government regulation change can cause a pharma stock to tank overnight. It also takes a long time for a pharma stock to become profitable, and that's why most people, they do lose money on pharma stocks. Number 2, penny stocks. So get this, any stock that is between $0 and $5 US dollars is classified as a penny stock, and 99.9% of penny stocks will never break out past $5. Then any stock between $5 and $10 is what I would call flirting with penny stock territory. In that case, there's a 90% chance that stock will never break up past $10. Word of the wise, try to wait for the share price to go above 10. In other words, let large institutions drive the share price up first, then you can put your money in second. Number 3, IPO stocks. They ran out of ways to raise money from banks, venture capitalists, and private equities. What do they do next? They go public to raise money from people like you and I, retail investors. And unfortunately, a lot of these businesses that go public have really weak financials. So when they go public, the share price goes up, but the first earnings report shows the truth and the share price immediately goes down. You typically see that behavior with most IPO stocks. Number 4, REITs, real estate investment trusts. When you go to the stock market to buy REITs, if you really pay attention to the historical returns, most don't even keep up with the S&P 500. That's why I tell people, if you want to buy REITs, just buy the S&P 500. Now, if you like real estate and you want to go outside the stock market, I recommend syndicates. A syndicate is essentially a 100-unit complex, 200 units, 500 units, 1,000 units. In that case, you're investing a larger sum of money, but you're getting paid pretty much almost guaranteed every quarter or every year. And it's typically about 10% of your investment. But the big one is, let's say the conglomerate gets bought, you get a really nice payday. Last one would be car stocks. I'm going to get some heat for this one, but think of car stocks in terms of units. Manufacturing one unit and selling it, making a profit on that is actually pretty hard to do, especially when that one unit weighs thousands of pounds. All the metal, steel, rubber, everything that goes into it, it's very hard to produce in mass and make a profit. That's why if you pay close attention to most car stocks, they typically don't produce the best returns. Yes, there are some stocks that have performed well, like Tesla, but in most cases, car stocks don't generate the biggest returns. Now, if you want to find some strong stocks that can make you money, I invite you to join Tykr for free.